All right, so Gary writes in asking if taxable accounts are affected by required minimum distributions. All right. He says, how about talking about a taxable account versus a SEP? A SEP is a simplified employee pension plan, if memory serves, an SEPP, right? Simplified employee pension plan. Anyway, so the answer to that is you think no, and you'd be wrong. So let me show you what I'm talking about. So I'm looking at the Tax Foundation's tax brackets for 2020. If you're a single taxpayer and your taxable income is under $9,875, so your taxable income, that's after AGI. So if you're a single taxpayer, you have a standard deduction. We'll just say for simplicity, $13,000, I think so. So that means you have about $23,000 of gross income. If you have $23,000 of gross income, and some of that income was attributed to qualified dividends or long-term capital gain, none of that income or that qualified dividends or long-term capital gain will be subject to taxation. Because as long as you're in the 10 or 12% tax bracket, you pay no taxes at all on QDI or LTCG. You don't. Short-term capital gain, you do it. You pay as interest. But what if you have $15,000 of qualified dividends? All right, so now I got $15,000, and we'll just say $15,000 of RMD. Well, now you have $30,000. That'd be enough. Yeah, that'll be. You have $30,000 of probably 15,000 of qualified dividends, 15,000 of RMD. That'll be $30,000 of gross income. Subtract your 13,000 from your AGI, and that'll give you 17,000 of, it's 17,000 taxable income right there. All right, so the amount that you have above $9,875 is subject now to taxation for sure. So that would be taxed at 15%. Because you're now in the 22% tax bracket. I know this is confusing, but it's important to understand. The RMD absolutely affects your taxable brokerage account if your taxable brokerage account pays any dividends, qualified or ordinary. If it pays any capital gains, long-term or short-term, and if it pays taxable interest, that income will be affected potentially to give you higher tax rates on qualified dividends and long-term capital gain. I hope that makes sense. A lot going on there. I get it. But that's another reason why you want to make sure that the accounts that you hold in your brokerage account don't pay much in dividends and don't pay much in capital gains. So an ETF is a wonderful place to start. A growth-oriented ETF to offset a value-oriented ETF in your SEP would make a perfect sense. So just keep that in mind. Everything flows. Everything works together. So your RMDs do impact your taxable brokerage accounts potentially. And it certainly impacts your Social Security. So just keep that in mind. All right, we'll see you.